Surging property prices could result in interest rate rises. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from the Sydney Morning Herald, warning about potential interest rate rises from the RBA because of surging property prices. Now, if we jump over here, we can see this is from the ASX. This is the RBA rate tracker, predictions of an increase or decrease to rates. Now, as of today, a decrease to 0.00% is, 69% chance. There you have it, everyone. We could hit even lower because right now, the rate is, I'll bring up the cash rate, is at 0.1. I updated this chart to show that decrease. It barely moved a pixel on the line, but I still did it. If we go to 0, there you go. There you have it. So some people are saying, oh, what's going to happen to all these people borrowing this money if interest rates go up? Our very own governor from the Reserve Bank has said they're not worried about property prices overheating. It's not in their mandate. They don't care. He's more concerned with employment. So do you think they will actually raise rates? Or can they raise rates? What will happen if the market starts to crash? Look at what happened in the US when they tried to normalize rates. It didn't last. Market said no. We'll have to see, everyone. We'll have to see. How many people do you think, even if rates went up 3%, how much of a hit that would be to their mortgages? Let alone what happened back in the 90s. When you actually could get a decent interest rate by just having cash sitting in the bank. So the largest 1-month jump in house values in 17 years and a surge in new home loans has prompted warnings. The property market is at risk of overheating and could force the Reserve Bank to reassess record low interest rates. Well, of course, the property market, or at least the housing market, is overheating. This is what happens, guys. This is the Cantillon effect right here. Money supply is increasing in the property sector, so we get a bubble form. The value, the cost of those goods, which are these houses here, inflates relative to other things. The purchasing capacity of our money is decreased. Some economists believe the RBA, which meets on Tuesday, may have to start lifting rates as early as next year to deal with house prices, which rose 3% in Sydney and 2.5% in Melbourne last month. We'll have to see if that continues when banks can actually start foreclosing. CoreLogic reported Sydney's median house price had reached $1 million and 61,000 in change, up 4.8% over the past 3 months, while Melbourne had climbed 4.2% to 829,000. Prices on the rise across the country. In regional Tasmania, dwelling prices are up 13.8% over the past year, and houses in Canberra, Hobart, Darwin have increased more than 10% over the same period, despite the deepest recession since the 30s. So the question is this a dead cat bounce? There you go. This is the problem. We're so obsessed with property here that everything feeds into it in our country, really. And you can understand why so many people think it's the only way to get ahead, and they can fall into a trap. But then the government will take care of you. Nationally, prices rose by 2.1% over the 4 weeks of February, the single largest monthly jump since August 2003, aided by ultra-low interest rates and federal and state government COVID-19 support programs. Separate ABS figures released on Monday showed potential home buyers are increasingly prepared to take on more debt to get a foothold in the property market. Well, people are suffering from FOMO. They're suffering from frustration. With some viewers are sharing the story of how they've just been looking and just had enough. There's a sense of relief when you get in. Home loans jumped by 10.5% in January to be at 44.3% higher than a year ago. Loans excluding refinancing are up by 110% over the past year in Western Australia, 74% in Queensland, 39% in Victoria. We've just had the first recession in 28 years, everyone. Look at what's happening. First home buyer loans rose by 10.1% to be 73% up over 12 months ago. More than half of all loans sold in January in WA went to first home buyers, while in Victoria it was 46%. Owner-occupiers are now starting to battle investors who have re-entered the market, with investment property loans up 9.4%. It's not just the property market strengthening. ANZ's monthly measure of job ads rose 7.2% in February after climbing 2.6% in January, and is now 13.4% up over the past 12 months, reaching its highest level since October. And here we go. Here are the economists. This is the Sydney home prices. I mean, there you go, everyone. CoreLogic Price Index. The RBA has signaled it does not expect to lift official interest rates from 0.1% before 2024. And I bet you they won't. Unless they hit their inflation target early. But among economists taking part in the Sydney Morning Herald, the Age Scope survey, too believe there could be a rate rise as soon as 2022. University of Melbourne professor Neville Norman predicts an increase in the fourth quarter, and Bankwest Curtin Economics Centre's Rebecca Castles forecasts one in the third. Another three believe the rates could start to rise in 2023. I mean, can we trust the RBA with their predictions? I'll bring up my, wage growth predictions there. I mean, it's just... First recession, guys. Property is going to the moon. I was talking to a certified the other day. I said, I bet you never thought you'd be this busy after our first recession. AMP Capital Chief Economist Shane Oliver said several factors were driving the property market, including government incentives, the unleashing of pent-up demand, the removal of responsible lending obligations, and fear of missing out. So we've got government forced, government because of the lockdowns, government intervention, and media. He said prices could climb another 5 to 10%, which would start to worry the RBA. The acceleration in home prices is likely to start to concern the RBA when the average prices only just surpassed their 2017 high. Growth in housing debt remained relatively subdued at 3.6% year on year, and little evidence of a significant deterioration in lending standards at present. It and APRA are unlikely to reach for the macroprudential lever just yet, he said. Westpac Chief Economist Bill Evans said low interest rates would remain part of the economic landscape for a long time. RBA policies are needed to remain stimulatory for a number of years. Macroprudential policies to deal with damaging asset bubbles should be applied if necessary, with a view to a soft landing for markets rather than a sharp deterioration we saw in 17-19, he said. Well, there you go, written by Shane Wright and Jennifer Duke. What do you think, everyone? Do you think we're going to see a rise in the interest rates? Do you think it will even be possible? Is this just the inflation that they want to see, but they're not really paying attention to it? What do you reckon? Let me know your thoughts and opinions in the comments below, everyone. Are you worried about an interest rate rise? I mean, I've locked in for 4 years, simply to stop me from being able to pay it off, so I actually get my renovation done. But, I don't have a big mortgage. I'm not worried about a big interest rate rise. But if you're borrowing like, 800-700 grand, and you go up another 3%, it's going to get tight. Let alone all the people who are doing interest only, and then those periods run out and can't pay for, can't kick out their tenants, can't get anyone to pay rent. First recession, guys. It's going to be an interesting year, I bet. As always, let me know your thoughts and opinions in the comments down below. Please like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Support us using affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. Have a great day. I'll see you next time.